Hope you're well and doing great. I sincerely hope you're doing well and doing great. I know a lot of people out there are feeling some pain right now, and I don't like to talk about our open positions for those that are trading both sides in so much as that. I listen. I want everyone to do well. There's no question about it. Sometimes it takes some hard lessons in order to get people there. A lot of people, easy enough, just a few weeks ago, up and to the right. Wow, everyone's in expert phase. Why trade a system? And there's a big lesson in learning, knowing when to be in the market, when out, and what side. I want everyone to be there. I want everyone to be there so that as we continue moving forward, regardless what happens, you're on the right side. You're able to do what's necessary to preserve capital. People want to make those excessive gains. They come when the market gives them. They truly do. Right now, we are on the verge here of a massive technical breakdown. From my view, it's a major technical breakdown. It's one that I talked about as a de-risk event. I said that if we broke, maybe I have it over here, broke 88K, that is a major de-risk event. You can see since then, this is my bad. This has moved up over here and up to 92. But point being is that I had said earlier on, if that were to happen, you have to know what you're doing. And I think most of all, that should mean anyone that is fooling around with leverage, you need to like tighten it up right now, or you really face some potential severe consequences later on. I talked about if anyone was taking up Jack Mahler on his strike loans or anything like that, now's the time to either pay them off or tighten up that LTV. You don't want to see any type of event that causes you to like move backwards in years. So it's safe than sorry. And I said, look, for me, this might be, I said at the time, this might be an opportunity that me or someone else looks to actually dollar cost average in. Now, I'm not dollar cost averaging over here. I know I had actually at much higher, 105, took a DCA. I'd be waiting for a much lower position if it came at this particular point. I know other people, some really smart people. Did you see that wild statistic? 95% of all people who have purchased Bitcoin in the last 150 days are underwater in their position. That is a worse ratio, 95%. That's a worse ratio than during the FTX collapse, as well as during the COVID lows. That is absolutely wild. Nevertheless, I know some smart people taking a bite over here at 89, dropping down below, maybe some further at 85. There's a potential little support over there. It's these levels here are to help you make sure that ahead of time you have a plan and formulate that plan. All right, let's take a look at what's going on over here. And yeah, potential major breakdown today. It matters if we close in or out. Speaking of that, like, let me just start over here on the NASDAQ. And NASDAQ this morning, roaring green. By the way, let me just like, I have an entry over here at $50.20 triggered. And then this morning, they ripped up the equities and then they since rug pulled them down. Momentum here coming down. Stop loss at 46.20. It's right on the verge, and yeah, there it is. So some people take major issue. What a call. Guys, that's not what trading is. This is, first of all, not a systematic. This is a discretionary trade setup over here. I thought it was worthy of bringing to light here during our sessions. I absolutely do. By the way, and I don't, I don't think so, but you all know sometimes when these things stop out that, it's we talk about the new 1.0, right? And usually whatever the risk was, that winds up being a good reversal, but we're not getting gnarly right now. It's not about that. major, like high risk event coming into the market today after the bell with Nvidia earnings. I am excited as all of you to see what exactly the aftermath of that end market reaction is to that. Oh, it's another trade. Guys, I saw someone or was having a conversation this morning with someone who was looking for a system that had a 70% win ratio. He's like, if anyone has a strategy with a 70% win ratio, please let me know. And my response was like, listen, like this comes back to the roots of CTM. This is Dr. Van Throp. I noted in 2007, 2008, he said the most successful systems in the markets have a win ratio of somewhere between 35 and 55%. And a small minority make up of those winning trades. It's already a lot of people, they don't want to be wrong. The reason people fail is because they don't want to be wrong. That's as simple as that. And instead of thinking about it from a probabilistic standpoint, and he's saying that, listen, the most successful systems, they actually lose more than they win. And out of the winners, you know what? Only a small minority of those make up the majority of the games. Take any CTM template, and that's exactly what you have right there. And it's no different when it comes to discretionary trading. It's no different at all. You are trying to go ahead and just have probabilities, which means that you want, even on a discretionary basis, it's very similar to systematic makeup. You want your wins to be greater than your losses. Does that mean every trade you take, you have a 3-to-1 or 4-to-1 risk to reward? No. Many of your winners will stop out with small gains or at break even, and then you have small losses and full stop losses, which are a lot smaller than your average win. And that's how you're trying to do it. So I was saying to you on this discretionary setup that I think that this has the potential here, if it were to break out of that sharp descending wedge, to like retrace 50% of this move down, roughly $60. That's a 20% move. Is that a position trade? No, that was like a quick smash and grab if you get it. And by the way, some other people, if that were to happen or if it does happen, they might go ahead and take a small piece of profit off, and they might go ahead and lock in some profit, and they might let the rest ride. Some people maybe believe that we have here something that people, that for me, it's not a position trade. It's just a trade. And then you could add different money management layers on how you manage that. And someone, I mean, if it weren't for the Nvidia after the bell, and this trade were to stop out, we looked at where the stop loss here, it's just managing risk. Then under different circumstances, I would be more apt to go ahead and fade that. You're in a strong downtrend. You have what develops ultimately, so far it looks like. I mean, we haven't stopped out yet. Very close to it. What looks like is developing over here is a bearish continuation pattern. It looks like a bear flag. And if that breaks down, it could trigger. Now, you do have breakout and a retest underway. It could go either way. It's a little less than a coin flip. Sorry, I was catching up with all of Ace's comments over here. All right. I was catching up with Ace's comments over here. Let me just jump back over here, and yeah, massive. Let me come down to yeah, let me come down to 30-second time frame over here. Look what they did on the open. Ripping it up. This is a 400-point move, and then they fade the whole thing, taking them out over here. Wow. You know what? I bet there are some intraday traders out here on the future markets that have made absolutely massive bank today. Massive, massive, massive bank today with that type of range. And here we go, a strong bounce over here. I don't know what's happening or what's going to happen, but I know that's gnarly. And I have expectations that like Nvidia's earnings are so important. I hope they are. I hope what happens if we find out market is much more concerned with Powell's pivot about a mere 25 basis points, and market wants some type of action. It wants those ample reserves that to be pumped up. I don't know. um but at the same time, this is the first technical breakdown we've had on the Nasdaq, and so far we are potentially putting in a breakdown and a retest. And you know what, if we take out these lows, this could get a little gnarly. Don't forget on the breakdown, and yes, after a technical breakdown like this, and this is the first one, and we've been monitoring this since forever, finally breaking now. This is from the April, the massive ascent to new all-time highs, the first technical breakdown since, and now we have to see if it holds or if it's repaired. A simple repair will look like something like getting above that line, which is going to coincide with getting back above the green line. Back above the green line is just neutral. Back above the yellow line is a breakout in effect, and then that will be nullified. What's interesting is if you saw over here, I was pointing out to you that we saw yesterday S&P triggering massive technical level, the break of 6,750 over here, and you saw all of a sudden in the next week 40 billion to sell, 80 billion over the next month. And what's interesting about that is the last time that we've seen such a massive CTA sell trigger was back in middle of October. And what happened over there? They basically pumped the lows. So look, there's selling pressure now that is coming into the market from CTAs. Is that a signal in itself? I mean, during April, we saw during this period over here, we saw massive selling taking place from CTAs. Massive. And it waterfall down. Well, the last time we had such an event trigger, it didn't work out for their system. So just noting about what's taking place in the markets. Guys, position trades, Bitcoin bull runs has been out of the market here for since 113,000. MicroStrategy is the only equity position in the market. Aside from that, we are and have been 100% into cash. And MicroStrategy here has a banger going on, 30% into profit. And it's just what it is. I wonder, we're not there. We won't be there for a long time, but I wonder if buy side boost in equity markets is one day. I know the math works, but it needs to be, the numbers need to be completely run. Over here on swing trading, we are 10% open position on Ethereum and a 20% open position on Cardano. Don't get comfortable. If for any reason there is a massive snap up as we are breaking down technically, I don't know anyone who trades 108. 108 historically has been more volatile, but the highest performer, that's holding an open position 20%. We are breaking down important level right now. It remains to be seen whether or not this is a confirmed break. Obviously, we have this high impact news event after the bell, and it remains to be seen what's going to happen from here. I don't know. So, I mean, he's got, one of the greatest investments of all time was not only the Facebook investment, 500 million into a billion plus. His 401k, his Roth IRA has the highest return out of any, but he was taking private investments inside that IRA. So, like launching private companies and private equity. So, is he extremely, I read his book. I don't know what it's called, 0 to 1 maybe or something like that. I thought the book was terrible, but he's got an insane track record. We'll see. we'll see if he's successful on his Ethereum treasury companies as well. Has he been? He made like Palantir. They bought a bunch of gold, $50 million worth of gold, a few years ago, and then they sold it. What that wasn't such a good investment, right? Um, it's hard to say. You also I saw SoftBank sell, and he's known notoriously for having really poor timing. He sold their billions of Nvidia exiting, but they did that to protect their open AI investment, in so much as that they needed to go ahead and build out and invest into infrastructure that helps open AI. So I'm not sure. I personally, from my own take, from far away, but really my own take on it, is that Nvidia's trading at a very realistic levels, and that there's something really wrong if over the next year, over the next 6 months, over the next year, over the next 2 years, if Nvidia doesn't continue to perform. It should, and likely will. And are you? Yeah. And I've seen some work talking about companies that have high capex spendings, and how you could see it happening in Meta right now, and generally that's a drag on them. There's also brilliant stuff going on. I mean, you see what Bezos and Elon are doing with their new AI manufacturing giants, Macro Hard, and it sounds something like it starts with a P, Prometheus, something like that. Bezos' new venture into doing the exact same thing. Macro Hard. That's the future. It's going to be absolutely. It's going to be krill. It's going to be amazing. Look, a lot of people talk about this being an AI bubble. I talk about it being an AI boom. You see that Warren, just, the value investor himself, taking a position into Alphabet, and a lot of people talk about, the spending that's going on, which right now is about 1.6% of world GDP, and during the railroad bubble, they called it, right? During the railroad boom, it got as high as 6% of GDP. So what we're witnessing right now is, for sure, the markets here looking for a little bit of liquidity love, right? Fed did the same mistake they made out in 2019, is that they tried tapering the Ponzi, running QT until something broke. And when then something broke, they had to stop QT and begin running up the balance sheet. And we're just there. We're at that part of the cycle. And that part of the cycle leads to them needing to be more accommodative. Because at the end of the day, the Fed's only mandate is they have to keep the music playing. That's their only mandate. And that is the situation we're running towards. And right now, clearly, Bitcoin is being a barometer of that. And you could see it. Now, is that going to be long lasting, or where does that, like, what's the straw that breaks the camel back, and when does that come? Is Nvidia in this moment, and obviously I don't think so, is Nvidia in this moment enough to turn things around? I A bounce perhaps, but there's greater forces at play. The US Treasury finally yesterday letting go some of its TGA and adding a little liquidity. A little, that's not enough, but is that enough to counteract the CTA selling pressure that's going on? What happens? Likely the main events, and likely more than Nvidia, and truly, I like I think Nvidia is gonna put up. Someone was putting up some numbers earlier. I want to go ahead and check them out really quick. I saw the rate cut odds now at 49. I'll check that in 1 second. Someone was putting up 81% Nvidia beats earnings, and it's not. And look at the earnings, or the estimates are significantly higher. And not only look at that massive potential beat, but obviously their guidance ahead is what matters most. Markets are gonna. It's not so much that they beat. It's unless they miss. If they miss, that's a different story. But lofty expectations. Um, there's a thought somewhere, and I'm coming back to it right now. Let me stop over here. So, as of right now, expectations have their fit. Oh, wow. Wow. I digress. Good call on that. I was looking earlier this morning, not like 20 minutes ago, and it was 51% favoring a cut to 49%. That all comes down to two things. The 28th, we have the Fed beige book, which is going to be really important indicator of what's been going on with the economy as the government was shut down. And then the following week, we have jobs data coming in, and there I'm a little confused. Where's non-farm payroll? First Friday of the month. It's not on the calendar. I don't know what is going on. And then this data moved. They moved the JOLTS, which was, I guess this is since the government reopening. How inefficient is government? They like, how much time do you need when you get back to work to get like your job done? They have what was the first week of December is now put up till after the Fed. Maybe that's what's causing the jump in the expectations for the pause in December, because we're not getting data that could have turned the Fed's decision. I don't know, but that's changed over the last since I last looked, which was maybe not yesterday, but recently. And what was to be a deluge of data that had to do with the jobs during the first week of December has now been moved. Non-farm payrolls is not even on the calendar. This is quite strange. So I don't know. Maybe that's what's causing the odds to favor here the pause. Not really sure. Interesting. So much hype and confidence from Jordan. Confidence quickly drained. Is that anyone else's read, Phil? That is that anyone else's read? We don't. It doesn't confidence. It's just about positioning, Phil. I bet you, Phil, when we saw Bitcoin bull runs exit at 113, you were like, what a joke. I don't know. Here we are not, Phil. I think when you saw us, me bearish in September, October, but then riding all these long positions in equities, you might have been like, the dude's bearish and position long, and then quickly before the drop, 100% into cash, except for MicroStrategy holding a 31% open short position. And then, yeah, we're sidelined over here. We're going nowhere. We're going nowhere. Well, Ethereum has been a rocket finally this year, no doubt about it. And we've been able to capitalize. Open position 10%, Cardano. The confidence, so much hype. Phil, I can't help you, because if you can't keep up, there's nothing I could do for you. There's nothing I can do for you. But as far as confidence, it's not a confidence game. Confidence is when people don't know how to maneuver within markets. You could take an opinion and be really like confident. Is that all you got? It's not a confidence game. It's a game of skill and mastery. Oh, I remember 2021 and 2022 so well. How well do I remember that? Man, expectations in 2000, and I remember this, right? 2021, Jordan calls, break of 50K, something's not right, get neutral. Market drops 50%. Jordan's like, everyone's worried. You know what? By October, we'll make a new all-time high. By October, new all-time high. And then here, we're going to make a liftoff. I think 180,000 diminishing returns is going to be taken out. Should be a liftoff, and this is where we should rock it off. And then that didn't happen. And instead, we had a technical breakdown of 53,000. And I'm like, that's a major de-risk event. That is not right. Get neutral, pay off all your loans. And then we had a break of 35,000. I'm like, listen, if you didn't listen to me before, it's not too late. This is your last opportunity. And then that broke. And then we had $27,000. I said, listen, if you missed the first two, it's not too late. This is the last one. And then that broke. And then we traded it all the way down. And then I said, $17,250 in 2022, Phil. I just did 2021, and now we're in 2022, and you're looking like a fool. $17,250, bull market breakout. But Jordan, everyone is so bearish. FTX just collapsed. We're going bull market breakout. Yeah, Phil. It's not what you say. It's what you do in real time. That's the part that Phil, that's the part that you can't handle. It's not what you say, it's what happens and what you react to it. It's the markets. You're missing everything, Phil. You are like, and that's it. We've spent enough time with you. Oh, I don't. Do I think the markets are going to bounce here? I don't know. How could I know? No, seriously, sincerely, let's look at this over here and let's look at a little TA discretionary. And this is a major, major level. This level I pointed out yesterday as the most important trend line in crypto, similar to Phil back in 2021 during the summer when I put out the most important trend line in crypto. And then when we broke out, we went to new all-time highs. This is MicroStrategy. I don't think MicroStrategy is blowing up. MicroStrategy has actually been able to um, put together some credit market products that I think are going to be an advantage even in a bear market, in so much as they'll be able to continue stacking. You saw MicroStrategy go through the 2022 bull market and 76% drawdown. I don't think that a lot of people are under some, like a lot of people think that MicroStrategy's average cost basis is their liquidation level, which is not true at all. Like they don't need to sell. Do they have obligations in the future that they need to meet? Yes. If they needed to, could they be forced to, at any point in time, to sell a little bit to make that? I mean, the only way MicroStrategy goes under, in my opinion, and this is, I'm not an expert on MicroStrategy. The only thing I know about MicroStrategy is one thing, and that's simply when to be in it, when to be out of it, and on what side. And even on the buy side alone, it's been massive in 2025, in 2024, and in 2023. And now the short side here is so far printing. Um, you never know, right? Like, could Bitcoin on this breakdown here snap up? Yes. If Bitcoin snaps up, is MicroStrategy going to snap up here with it? Absolutely. It remains to be seen what the final take is on this trade. But MicroStrategy, like they could go underwater on their cost basis, and that's not them being liquidated whatsoever or anything like that. I think that MicroStrategy is going to obviously um, be around. And and I think that MicroStrategy shareholders, a lot of them are not happy with the performance in 2025. But look at Bitcoin in 2025. And throughout this 2025, and guys, you guys know I'm not like a fan of Sailor. It's the opposite. But like the truth is that he's been stacking Bitcoin throughout the year, including last week. And as Bitcoin goes on to do Bitcoin things, it's going to pay for strategy, unless if Bitcoin fails, MicroStrategy blows up. Yeah. I think some MicroStrategy holders might have a little off. Like I think Michael Saylor's time preference is a little different. That's all. Wow. Let's. I hope we get it. I don't know that we will or we don't. I don't know that the markets are focused. How much they're focused on MicroStrategy? Is MicroStrategy earnings going to be the event? Like, we'll find out. It is obviously, if for some reason their guidance was like, listen, it turns out that people are giving up on the AI build outs. Everyone pull their orders next quarter. There's simply not enough energy to run these chips, and it's the first one to cut their losses, and they're getting out, and we're going to be under pressure for the next year. That markets will sell off horrifically on that. No doubt about it. Is that what we're about to see? I sincerely doubt it. Sincerely doubt it. This is the most important trend line in Bitcoin, in crypto. And if this does break away, we got, a nice gap to fill. This would be surprising could it happen? It's underway right now. Here's a nice look from, nothing's changed here. The only thing that potentially changed here, and I was looking at this and wanted to see what your thoughts were on it. I'm leaving it here because this is support resistance. But yeah, I wonder now if that's worthy of moving it down even more aggressively here. It probably is. I'm so conservative though when I shouldn't be. It probably is, but I'm so conservative when I shouldn't be. So we'll check back tomorrow. Hopefully this thing does pump, and then we get to see what would have been the better play, and we'll check it out. And here we are. Here the dollar is so strong here on the view that the Fed is going to take off December, and the dollar continues here to ramp up. I wonder what the Japanese yen is doing. Oof, we're getting rocked here. We'll see what happens. 160 is in effect, in play, or 159, I should say. I have some resistance right over there, and then I just want to see right above it where, yeah, it's a tough one. I'm looking here, and then where I can find the bodies. Probably, yeah, right between 159 160. You're going to have a really big level that we're going to find out if the Bank of Japan chooses to defend or not. But dollar ripping, yen getting wrecked, and here we are. 1.0. So Ace is looking like this. Ace is checking out, and he's saying at this particular moment, well, Ace, I'm not gonna speak for you. I'm gonna give you two different lines, and because I see a black diamond here as well. I'll remove this for a moment. I'm gonna put this in over here, and I see this as a conservative breakout for 1.0. Notice that if we were to shoot up over here, like you're recovering this area of resistance and then support, sorry, and then breakdown. So you're recovering through there. That's conservative. That's safe. That's why we call it conservative. And then you also have a black diamond right here, right? And and there you are. I would not. This would be double black diamond in a severe, yeah, well, there it is, in a severe downtrend. I mean, look, it's the most aggressive, it's the best risk to reward, and the lowest win percentage. This is a better win percentage. It is a higher risk to reward, and it has a higher probability of taking. And this one has the worst risk to reward. It's also the highest percentage of it actually being a profitable trade. So there you go. And it's just to see the difference. This entry coming in right now at $96,165, just to give this one obviously very low, and then this coming up 101. So this would be recovering the 50-week, the weekly 50 SMA on the black diamond breakout. I personally think that if that happened, like if markets are able to recover up over here, that's just that's a sketchy place to be. I don't think you close above, you're out of the woods, or we're out of the woods, or anything like that. I think that's a pretty big bounce, and you have to watch here whether or not we get further downside pressure after that. What? That's terrible. Do you know what the cutoff is, so we can figure out approximately how much money is being printed? Wow. Silver. Bam bam. Unbelievable. Um Unbelievable here, seeing silver above 50, gold above 4,000. Um my own belief on this is two things. Monetary reset is happening, right? That's what gold's pricing in. Gold's not pricing in the debasement trade. Bitcoin is the debasement trade. Gold right now is the monetary reset trade. My expectations are that the consolidation could last and should last into the middle of the first quarter, sometime end of January, beginning sometime around there, sometime by February, middle of February is when I will be looking for a reacceleration and breakout. It could happen anytime beforehand. I have this like light marker in. It's showing how long I think the consolidation should last. I have no idea, like during that consolidation, how low we go, if we even take out the low that's in. If you go back to the previous consolidation, I thought we were going to take out the low, trade closer to 3,000. We just consolidated at resistance. Is that going to happen again, or are we going lower? Does it last longer than this? Around this time is when I would be looking for a resumption, and then you need the technical breakdown for that to happen. Could it not wait? Do we take out? That's why this line's here. If we break out sooner, if we take out that high from just last week, are we going to go to all-time highs? All those things. That's my view, is that this is a position trade. When gold broke above 2,000, and I called the super cycle on gold, literally, I said, listen, it's not stopping at 2,500. I'll see you at 5,000, and then we'll reevaluate where we are. And it seems to me that it should be abundantly clear to everyone, outside of something changing where, like, well, nothing's going to change like that. and what my thought there was like outside of like the USA being like, you know what, we're all into Bitcoin, and we're putting a floor at a price floor at X amount of price, whatever, anything like that, and like basically abandoning gold. But they're not going to do that. They like them both, right? And we know that the case for and why it's monetary reset is because no longer will countries feel safe holding treasuries. They've been stacking gold. They continue to stack gold in place of US treasuries. That's like for the first time we're seeing now foreign central banks own more gold than treasuries, and that's not going to stop. I don't think gold stops ultimately anywhere. Like reevaluating now as we came pretty close to that $5,000 mark. And I thought maybe we come to like 47, 48, not this quickly by any means. I didn't think we would shoot up out of this breakout like that at all. Um, but I imagine that, you know, by when, are we going to see 5-digit gold, you know, 10, 12, 15,000 gold by the end of the decade? I think there's a really strong case to be. That's my feeling. I do think so. Which gap are we talking about? I don't wait. I'm not a gap trader. I don't I don't consult gaps. Thoughts on the quantum challenge? Quantum. Um, As far as Bitcoin's concerned, I don't think that's an issue. I think that as the technology gets closer to where it becomes an issue, that whether or not it's a soft fork, which it likely will be, or needs to be a hard fork, it will be. There are thoughts on what happens to coins in like Satoshi's wallet, or that, and if nothing had changed, and those would be up for grabs, no doubt about it. There was the thought out there. The one that I liked the most was that like maybe like they're on older coin, there's a certain amount of spend that could be happen in a certain amount of time. Like, not to take away, like, if you produce a quantum computer and you take those funds, that's your honeypot. Go ahead and but like instead of going ahead and dumping 1 million Bitcoin Satoshi's wallet out on the market, there's just a way to kind of like limit the time frame of that spend. But I don't think that's an issue at all. And I think that it's software. It's going to be upgraded, as all software in the world will be, to become quantum resistant when the technology and if the technology of quantum, catches up to reality. But that is, I think, by the most optimistic measures about when we could see any type of, let's say, significant benchmarks achieved with quantum computing, it's a long time away. It's not close. We're not on the verge of that happening now. Technology and its growth is exponential, and when the advent of further advancements in LLMs could lead to a quicker advancement of quantum computing for sure. But again, at the end of the day, Bitcoin could simply be upgraded, and there's a lot of other, let's say, by far greater prizes than Bitcoin, nuclear codes and whatnot. Well, this is a great question, Dean, and you ready? And sincerely, like, when you opened up that position at 106,000, because I took a position at 105,000, and when I took that position, my position was like, like, I'm not selling it. That like, I'm holding this. Like, is Bitcoin going to 1 million? I think so. Do I think it's going to stop there? I don't think so. When you took that position, did you take it, and what was your time horizon for that trade? Was it as long as mine? Or were you saying if this position loses 25%, I'm cutting my losses? Or if it loses 50%, I'm cutting my losses. I know people that bought Bitcoin at $19,000 in December of 2017. I know a lot of people who bought it, and then they went through the massive bear market of 2018 and lost 85% of that Bitcoin. And then they went through the grueling 2019. Well, they gave in 2019 you saw a massive quick sharp move to 14,000, but that was faded into the COVID low. And then finally in 2020 at the end of the year, they recovered. And now at Bitcoin at 88,000, that 20,000 or 19,000 they purchased that wasn't so bad, and here they are, and I don't think they're selling, much like Sailor having gone through a massive bear market in 2022, and he's kind of battle tested now. He was a newbie. Sailor didn't start believing in COVID 2019, 2020, and he got battle tested, and now he's one of us. And when you're buying the Bitcoin at 106, you have to have expectations and a plan. And if you're trading, then you should use our templates. No doubt, you should just trade off our templates. If you are investing, you have to ask yourself, how much are you willing to lose? Is there a point where you're exiting if you're wrong? And how long do you plan on holding? And what are your future expectations? And by the way, if presented, like Phil obviously was unable to pivot when presented with evidence, but if you are not like Phil and you're presented with new evidence, and such as that the United States has found a way to pay off all their debt and they're going to be fiscally responsible going forward. And not only that, they're giving back Russia their reserves, and they're saying, listen, we found a way that you could trust us. And then, the bullish case for Bitcoin has just gone away. Are you able to pivot? It's not easy. Like, some people get so tied to an identity that they're not able to. Or are you in Bitcoin because of the Kager? And it's Kager going on. I don't have the Kager anymore. It's Kager roughly, let's say, does anyone know the 5-year Kager? It's probably attractive. I don't know, 70%. And what happens if Bitcoin Kager goes down? I don't think this is happening. What happens if it goes down to 20%? And what happens if by 2030 the price is only 250,000? And you're in it not because you're in it for the tech, or you're in it for the freedom, or you're in it because it's permissionless. You're in it because it's an open protocol. You're not in it because it's fair and just. You're in it to make money. And then if it's only having a 20% Kager over the next 5 years, even if it winds up, is that something that you're interested in? And if you could be presented with something else that has a significantly high Kager, is that where you want to be? Those are the questions that you need to be asking, and these are the most important questions. 55,000 Bitcoin is cheap. If it like this 55,000 Bitcoin is cheap would take out, when we called the bear market bottom 17,250, price kicked up, and then it had a sell impulse right over here. So it went from a break above 17,250 into a sell impulse, and then recovered again. Since then, it hasn't broke the bull market breakout. And I had no idea it was going to last that long, where we are today. No idea. But if it breaks it, that's a massive technical breakdown for me. That's coming in above 55,000. Bitcoin is cheap. Now, you never know what's going to happen, much like the global lockdowns. And here we are. But when I look at the macro, and I guess Phil missed over here on October 16th when I tweeted, looking at the macro, the coming rate shock, and everyone you hear out there on the YouTube tells you nobody saw the rate shock coming in 2022. Nobody expected the coming, and in quotes, rate shock in 2022. Bitcoin is not immune. I wasn't looking at lengthening cycles. I was looking for a much higher liftoff. But the Fed, which I always said was the greatest risk to the cycle, they changed their course and they started tightening, and therefore expectations had to change and adjust to price. That's all we do. It's not easy at all, especially in real time, at all. But when I look at the macro now, I say, well, the Fed's not on the verge of tightening. The Fed is on the verge of easing. And not only that, it seems that they might have to even do it sooner than expected. So that's what I'm watching over here. And of course, I've always said this, and I stand by this as far as the confidence thing. You ready? I believe the cycle high, when measured from the halving to the halving, is going to be closer to the 2008 than 2024. If this is the peak right here, then the cycle high was closer to the 2024 halving. And I've always said what happens in between is the hardest part. Here's the in between. How soon is the Fed going to be forced to play ball and to pivot and to provide that liquidity? Yes, the repo market is now drained. It's running on fumes. Markets are feeling and looking for that liquidity. Is it going to be provided? When is it going to be provided? Does it take a deeper correction in markets in order to force the Fed to act? Fed's going to act, though. The stimulus and the handouts, that's something that, if is happening, is really bad. It's going to cause inflation. And the worry becomes, and just so you know ahead of time, this is the worry. The worry becomes when the Fed does or is forced to move to outright easing, and then you have this reckless stimulus being put out there that's going to be that doesn't help people. $2,000 helps people pay their electricity and food bill today, and then it makes it massively harder for them down the line. That's horrible. But if that's happening, and when the Fed is forced to actually move towards easing, that means the next tightening cycle is going to come quicker. And sharper, quicker cycles means that just when people are getting comfortable, we're going to have to worry about when they move towards that tightening. All right, y'all. We're going to end it here today. If you didn't hit the thumbs up, go ahead and hit that thumbs up over here for sure on your way out. Tomorrow, our session is going to be an hour earlier. 1 hour earlier. I'll put an announcement inside the announcements channel. We're going to start at 11:30 a.m. Eastern time. And then on Friday, we are not going to be having a session. All right? So, to NVIDIA it is. Thanks for being here, fam. Lots of love. God bless you. And we'll see what happens after the bell.